Hello and welcome. You're watching First Stick here on News9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari, and with me in the studio as always is Amit Ranjan. And it's a Thursday morning and there seems to be a bit of a calm after the storm that was Nvidia's earnings. Now the company has beaten Wall Street's forecast on both earnings and sales, and on top of that even said that this quarter, Amit, is going to be better than the previous quarter. Certainly a more constructive looking setup this morning.
Yes, but there was a mixed reaction from the US markets to the release of the minutes of the US Federal Reserve policy meeting. Now, the people in the meeting were concerned about the risks of cutting interest rates too soon. So what happened is the markets gave mixed results. But of course, as you mentioned, the leader of the pack was Nvidia, which replaced Tesla as the most traded stock and released its fourth quarter earnings. Earnings per share were expected to come in at $4.64. They came in at $5.16. Revenue, which was expected to come in at 20.62 billion, came in at 22.1 billion. Here are the kickers now. They reported a net income, a jump in net income of 769% at 12.29 billion. And they reported total revenue jump of 265% along with that. Dow Jones closed in the positive at 0.13%. S&P 500 closed in the positive at 0.13%. As I said, there was a mixed reaction. Nasdaq was slightly in the negative, closed at 0.32%. European markets were also in the negative. Stocks 600 closed in the negative at 0.17%. Asian markets traded in a mixed way, reacting to Nvidia results. Hang Seng this morning is in the positive at 0.15%. Japan's Nikkei has almost touched its all-time high, and it is right now at 1.94% in the positive.
All right, and I guess the reason why the numbers of Nvidia did not really reflect on the streets, because of course the numbers came after the market hours, and by the time the market by the time the bell came for the Wall Street, the stock was down about 8.85% or so, and of course the market was feeling kind of jittery because the stock has delivered phenomenal returns, Samit. 40% just this year, 230% in the year gone by. So the market had all the more reason to be jittery, and there was a big swing factor. So during the extended market hours, from 2.85% that the stock was trading lower, the stock jumped as high as 9%. So expect very strong opening for not just Nvidia once the US markets come back to action, but also for the Magnificent Seven stocks, your Meta, your other Google and other stocks that are working in this field. Because again, the expectation that the commentary coming out from the management is that the growth is not going to slow down anytime soon. And
what Nvidia deals in chips, that is the pick of the world today. Everybody is going into them. So demand is only going to pick up. As you mentioned, they have said that the next quarter will be even better. They came in at 22.1 billion. They are expecting over 24 billion in the next quarter.
Wow.
So
that is a big jump in
revenue. So that's where Nvidia is going, and the chip industry is going worldwide.
And coming back to our markets, we opened on a flattish note. Nifty, by the way, even dipped below 22,000 at one point. At 9:30 around, we had broken below 22,000 levels, but since then we have bounced back, and I think there is for our local markets, of course we have the options expiry for Nifty, so there will be some bit of a volatility for the markets. But remember, for the last 3 sessions, Nifty had been making record high levels, so some bit of a correction, some bit of a pullback is perhaps due and maybe even desired for the participants who were waiting on the sidelines to take position. But to understand if this pullback will be as strong as the pullbacks we saw earlier in the year, let's also bring on board Mr. Santosh Meena, Swastika Investmart. Thank you for joining us here on News9, Santosh. Appreciate your time. And overall it's been a great week for our markets. Nifty has hit a record high for 3 consecutive sessions, as I mentioned, but we are seeing a bit of a shakeout. So are you cautious now, considering that the last 2 times when we were at record high, the pullback was very strong? 900 points the first time around, 600 points the second time around.
Yes, first of all, good morning, both of you, and good morning, all the viewers. Yes, there are some signs like if you can see the correction in mid-cap stocks last few days, Nifty was making higher highs, but there was some kind of distribution in broader market. So it will be a test of this market. It is just a small correction in broader market and consolidation in the headline index, and market against move again wants to move higher. So I'm waiting today's market closing, because yes, after a long time, yesterday Nifty ended at the low point of the day, and today morning there was a panic, but again there was a sharp recovery from the lower levels. So if market didn't give follow through, don't give follow through to yesterday's selling, I believe the market may continue its momentum, and maybe market may remain sideways for some time, and there will be stock specific action. But yes, if Nifty slips below 21,900, which is its 10-day moving average, then 21,800, which is a 20-day moving average, below this we can expect some kind of pressure. The real test will be in broader market. We are seeing some profit booking in some the leader of this bull run, PSU stock. There's some profit booking in the oil and gas sector and some PSU stock as well. So I think wait and watch for today's move to get direction of this market, because we will get direction for next 15 days. But yes, if there will be any correction, that will be again a good buying opportunity. Maybe this time correction could be sharp, but I'm not sure it is coming. It is near, or we have to wait for some more time for the correction.
All right, and as you rightly pointed out, PSU stocks are certainly seeing some bit of a shakeout, but we are also seeing a shakeout play out in Bank Nifty. Now, that has been a key driver for the markets in the last week. The index on its own has surged over 2,500 points. We had reclaimed 47,000 levels after a gap of 1 month. But of course, we saw the sell-off yesterday, and I'm sure expiry had part to play. But weakness is also seen this morning in Bank Nifty. We are once again below 47,000. Are you cautious again here?
Actually, I am very bullish on Bank Nifty, because there are some signs that there is a leadership shifting to Bank Nifty from IT stocks. Today, the IT stocks are doing well because of the rally in Nasdaq future after Nvidia results. But yes, there is some shift of leadership in Bank Nifty. If market don't fall from here, then I believe Bank Nifty may lead from here, and it is there is an unfinished business of testing new all-time high for the Bank Nifty. But yes, if this move fail, then it will be disappointing, and Bank Nifty may again drift towards 46,000 level. But yes, if market manages to hold at current level, I believe Bank Nifty should lead from here.
All right, and in the banking pack, of course, the private stocks now, private banking stocks now, they are also participating on the upside. And I think everyone is talking about HDFC Bank. We all own HDFC Bank. It's extremely overowned. But another underperformer that has been Kotak Mahindra Bank. It hasn't really done much in the last couple of years. Very relative laggard compared to other banking stocks, other private names such as your Axis Bank and ICICI Bank, even IndusInd Bank for that matter. What's your view there? What's the reason for the weakness? And, is there any signs that the stock may be bottoming out?
Yes, these both two private bank, Kotak and HDFC banks, are underperforming. Money is shifting from these two banks to some PSU banks and some corporate facing banks like Axis Bank and ICICI Bank. But technically, it is again the same level, around 1700 to this 1630 band is a critical support, because for last 2-3 years it is holding this kind of zone. So risk reward is favorable. I believe it won't fall too much from here. We can see some buying from lower levels around 1700 to 650 zone, but I'm not expecting much bigger move in this counter. It may remain sideways. We can expect some bounce back towards kind of 1850 to 1900 zone, but there is no major upside. We can expect some bounce back from lower level.
Good morning, Santosh. We have been talking about metals, mining and mineral stocks in the past. Now, there has been news from Hindalco in a surprise announcement on Tuesday. Novelis, which is a 100% owned subsidiary of Hindalco, US-based, of course, announced that it has submitted confidential filings with the US Securities and Exchange Commission for an IPO, which will be a secondary sale of Hindalco, which means that Novelis will not receive any capital as part of the offer. Now, Novelis seems to account for almost half of Hindalco's total revenue. It was acquired in 2007. And after this IPO, Hindalco will be one of the few companies which will have a subsidiary listed on foreign bourses. When I look at Hindalco stock, not reacted too much of late, just been up a little bit in the last 5 days. Nalco, in comparison, which is down on a correction, has recorded almost 100% earnings in the last one year. MMP Industries, which is also into aluminium alloy conductor material, is up much more, 113%. Where do you see Hindalco going from here? What do you make of this? Is there going to be a rally in India?
Yes, it was outperforming, but after this news of capex, it witnessed a sharp correction, and now it is also consolidating. But I believe it may see some more downside towards 200-day moving average, which is placed around 490 level. Then I'm expecting a good buying opportunity, because this level should be held, because I am bullish on metal space, because there are some signs of bottoming out of Chinese and Hong Kong market, and there are some expectation that China may come out with some kind of a stimulus, so which could be positive for the metal space, and metal space didn't perform yet. So any fall towards 490 level, which is 200-day moving average, will be a good buying opportunity in the Hindalco.
So looking at 490 right now, it's at 518. But what are your picks for our investors today?
Yes, so my picks for medium, I'm having a picks for short to medium term, because market is volatile. My first will remain SBI. I think last time also I have given call in SBI. But still I'm bullish. I'm expecting a level of 820 in the near term. 740 should be a stop loss. I'm also bullish on chemical space. There are some sign of bottoming out in this area, and one of the a small cap counter, SCI Archin Chemical, which has given a good results. So I'm expecting a level of 850 in the near term, the stop loss of 710. Third one is Tata Consumer. It is showing a strong bullish momentum, and after a consolidation, it is forming a kind of flag formation, and it may resume its uptrend towards 1225, where stop loss would be 1130. And as I said, I'm bullish on metal space. Tata is still showing signs of strength, so I'm expecting the target of 154, where stop loss would be 138. And my last pick will be Phoenix Mills. It is again showing strong momentum, continuously making higher highs, higher lows formation. 3300 should be your target, and 2700 should be a stop loss.
All right, those are the top picks from Santosh Meena for the short to medium term. Sir, thank you for your time. Appreciate your thoughts. Always a pleasure speaking with you.
Thank you.
But we are counting down to the big event that News9 is organizing this coming weekend. The News9 Global Summit is about the new India that is recognized as a rising economic power and a major global player. The theme of the summit is how India is poised for the next big leap. The What India Thinks Today Summit is being organized by the TV9 Group, and this edition of the summit is specially unmissable because a keynote will be delivered by Prime Minister Narendra Modi. What India Thinks Today Summit is on February 25th, 26th and 27th.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
From fragile 5 to top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface, but not the living people?
Welcome back. You're watching First Take here on News9, and the markets are facing the heat. They are struggling to stay above 22,000, and that's on Nifty, of course. In fact, we have broken below 22,000 as we speak. As of 10 a.m. this morning, Nifty was down 0.3%, sitting just about 8 points below the 22,000 mark. Sensex is also down 0.4%. In fact, the weaker of the two headliners, it's at 72,300. Just above it. Mid caps and the small cap, now they are also seeing a bit of a shakeout. They have been rather volatile in in the last couple of sessions, in the last 3 sessions. In fact, the recovery hasn't been as strong as it has been in the recent part for the broader markets, and VIX now it is seen a bit of a decline, but expect a choppy trade today because of course it's the FNO expiry, the weekly FNO expiry for the Nifty contract. But with that, let's also bring on board Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sir, thank you for joining us here on News9. Appreciate your time. I mean, what are you making of the markets now? The first 3 days of the week, we rallied to record high, saw a bit of a shakeout in the last couple of hours. But specifically, I wanted to touch on the broader markets because the correction over there is looking a little sticky this time around, isn't it?
Absolutely. I think market is looking a bit tired, Shuash. I think there is a bit of a lack of trigger and a feeling that the valuations at a lot of sectors and stocks are at levels which are probably unsustainable, and time-wise correction is warranted. And I think some amount of profit is being taken out. Bit of a consolidation is happening. It may not be bad for the market for the long term, but yes, a bit of pain in the short term, definitely.
All right. And, sir, a lot has been made about the valuations of PSU stocks, especially after this tremendous rally. A lot of analysts are saying that, despite this rally, they are still available at an attractive valuation. compared to, of course, their private peers. But is it even fair to compare it with their private peers? Because, I mean, traditional wisdom would say that they should trade at a discount because their ultimate goal is to serve the public first and then perhaps create value for the shareholders.
I think, that would be different from sector to sector. What you are alluding to is most probably the PSU banks. We can come back to that in a while. But I think if you look at the other PSU, which are in defense, which are in railways, which are in, other sectors like power, their goal is not to serve, selflessly people. They are, the corporates have with shareholders, and the goal is to, produce or do the right thing and make money. And that benefits the government as well as the public shareholders. So there, in these pockets, I think whether it's a defense, whether it's railways, and in some cases even in power, I think the valuations are looking a bit stretched. I'm not saying these companies are not doing good. They're of course doing very well. There's a sea change between what they were 5 years back and now. The number of orders they're getting, the business volumes they're generating is commendable. But there is a gap, time lag between the receiving of the order and delivery of the product or the service on ground. And, in some cases, let's say in defense, it takes a long time. So, if we start equating order wins with a, profit and loss in the accounts, I think that is where we are probably going a bit wrong. A bit of a consolidation, if nothing else, at least time-wise correction, so that the performance on ground can catch up with the valuation is warranted. As far as the PSU banks are concerned, I think, there is definitely a gap and there is definitely a scope for appreciation. And I believe that should happen. Even now, I agree with that view that they are available at a much reasonable valuation compared to their private sector peers. And probably there is no, solid reason for them to be at such a huge discount. They have cleaned up their act. The asset quality has improved significantly. The challenges which they used to face, 5, 10, 15 years back, probably are a thing of the past. They are reasonably well capitalized. The subsidiaries, wherever they are doing very well. And, bank like State Bank has appreciated significantly, but I believe still there is a long way to go. Bank like Bank of Baroda, Punjab National Bank, Canara Bank, I think they are good bank and they can deliver value over a long period of time. There may be blips here and there, but somebody is buying for long term. Some of these PSU banks definitely merit attention even now.
Good morning, Mr. Bandyopadhyay. Keeping to PSUs now, even the government looks at the next frontier industry as AI chips and large language models and servers. There has been news in the West yesterday after Nvidia, which is the most traded stock now over there, recorded 265% jump in revenues and 769% jump in their net income. Now, they are in the business of large language models, servers and AIs and chips. India has been making little steps towards that direction. Reliance has announced Bharat GPT, Tatas have announced their foray into large language models and chips, and so with Vedanta. Do you see this industry coming in a big way in India as it is in the US?
I think you're absolutely right. The government is definitely looking at new frontiers. I understand they are already open 100% FDI for space-related collaboration already. They are definitely looking at AI and ML areas as well. And as we know that, new generation, pretty much everything, including mobility, depends on the chips, AI and ML-enabled chips, which companies like NVIDIA are producing. So obviously there is a significant opportunity for manufacturing and doing a lot of R&D and engineering here in India. Some of the Indian companies are looking at it. Tatas, as you rightly said, are looking at advanced collaboration with global players, whether in Taiwan or US. So I think it's an evolving space. It's too early to, at least from my point of view, to bet or to predict which way things will move. But definitely there is a lot of opportunity and a lot of action.
So opportunity, but given that India is far behind and these spaces require huge amounts of investments, do you see any startups getting some impetus from the government in the near future just to be able to compete, or is it going to be a playing field of only large players, even in India, even to make a dent?
Distinct advantage. The small players, of course, the startups and all can be, also incentivized to become ancillaries or to become, suppliers to these large entities who set up facilities in India. They cannot probably, as a startup, it will be extremely difficult for them to envisage something like what NVIDIA has done or what some of these large semiconductor manufacturers in Taiwan are doing. So it will be a big boys game as far as the semiconductor and the chip manufacturing is concerned. But the ancillary space will open up for startups definitely.
All right, and Mr. Bandyopadhyay, before we let you go, what would be advice to shareholders at this point in time? The markets are at record high, but it's been a choppy ride on the way up. We have seen massive pullbacks, time and again this year. What's the word for shareholders?
Well, I think, if you are invested in Indian market and if you have a horizon which is, 1 year plus, I don't think you need to worry. I mean, I'm assuming that the shareholder is invested in good scripts and they have done their homework, and then there's absolutely no need to worry. I think we are on a solid trajectory. Both macro and micro trends are in favor of India. Geopolitics supporting India. So remain invested, absolutely no problem. And if you wish to, you can keep further strengthening your portfolio, taking opportunity of corrections in the market, but stick to good companies, stick to large caps at this stage. That would be my advice.
All right, that's Mr. Sudeep Bandyopadhyay for you. Always, great insights from you, sir. Thank you for joining us here on News9. But let's also take a look at the markets because they are seeing a bit of a pullback. The pullback, by the way, remember, started yesterday actually. In the last couple of hours of trade, Nifty gave up almost 200 points. We did test 22,000, but were able to defend that. But today, we have broken below it. Nifty currently is at the day's low. It's very close to 21,900 levels, and so far at least we are defending that, and this is as of 10 a.m. this morning. A bit of a pullback from 21,900 is what we have seen, but remember, in the previous two instances where the market had reached record high levels, we had seen a sharp pullback of about 900 points in the first time around, when we were at around 124, when that was the peak, and then from the second attempt to capture record high levels, the market had seen a correction of about 700 points. So far, I think the correction so far is not significant enough to caution, to warrant some bit of a caution at this point, but keep cautious of that, and perhaps on the way down, be conscious of the support levels that will come by the way of retracement levels. So that first retracement level was 22,000, and that of course we have broken below that. If we are able to still capture that on a closing basis, of course our bias will be bullish, but the next key level will come in at around 21,750 to 800 levels, because that is the zone from which the market has reversed course multiple times, and since we broke out above that and on significant volumes, that that resistance has now become a crucial support for us. Also, the 20-day moving average lies at around 21,750, so very crucial support for the local markets. But I think the trend will only reverse below 21,500, because over the last 3 months that has been an area that has provided constant support to us when we were in that range of about 21,500 to 22,100. 21,500 was often the floor from which the market had reversed course, so keep an eye out on that. But as of now, the market is down. It's down by about 0.6%. 21,923 is where we are at. On Nifty, Sensex is down 0.5% at 72,260 mark. The mid cap and the small cap indices, they are both also seeing some bit of a shakeout, and I think the correction over there is something that investors should be cautious about, because it's been sticky this time around. It's been 3 days of profit booking for the mid caps and the small caps. Yesterday they were down over 1%, both indices. This morning also down 0.5%. So keep an eye out on that. And India VIX, it's back above 16 levels. So volatility, of course, is high on the account of FNO expiry, that is today for the Nifty weekly contract. But that's all we have in this edition of First Take. But before we wrap things up, remember, we are counting down to the big event that News9 is organizing this coming weekend. The News9 Global Summit is about the new India that is recognized as an economic power and a major global player. The theme of this summit is how India is poised for the next big leap. The What India Thinks Today Summit is being organized by the TV9 Group. And this edition of the summit is specially unmissable because the keynote will be delivered by Prime Minister Narendra Modi. What India Thinks Today Summit is on February 25th, 26th and 27th.
From fragile 5 to top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.